Okay, let me start the webinar. Good day to one and all. This is Dr. Sivaraman of IKnowIndices.com. I'll be giving the Asian Session Live Market Analysis webinar between 5 and 5:30 GMT on 4th of March, that is today. I'll explain to you the expected market moves for the week. And since yesterday, that is 3rd of March, how exactly during the first week of the month of March, the market is expected to make the moves. So I will give the derived forecast and also the mathematically derived levels for you to understand what could be the possible trend in the market. Then we will try to fine-tune it on a daily basis using the market reading technique, which I have been explaining to you during the webinar times. Today also I'll explain to you for today's market moves using the live market quote page. So first of all, let me explain to you the expected market moves for this particular week. It is the first week of the new month of March. So the market is expected to make the monthly trend reversal moves. But in this monthly trend reversal move, more downward bias might be seen in the case of Euro and GBP. And this particular move could continue till the second week of the month of March. So that is what the forecast says. And they will take about 14 days or they will take about 2 weeks in order to make the drop and do the lower level consolidation with a downward stop and before making further rise. Or they may continue to hold at the lower level in order to induce all the long holders to liquidate before making the rise in a big way during this particular year. And they are expected to make the rise only from the month of May. So till such time, they are expected to make only the wide range swings in the market and there will not be any shift in trading zone. So yesterday we would have seen that Euro and GBP opened firmly or around that of the Friday close level and then without making much of an upward stop and they started making the slide. And you would have noticed that they did not do the upward stop and so when they stopped doing the upward stop and after setting the high, if they stop doing the upward stop and in a big way on over that of the high, it indicates that the traders have liquidated or the traders have done predominantly the short covering and they are afraid to take the sell positions and they are willing to take buy positions during the drop. So when the market sentiment is changed, then the traders are willing to take the buy positions rather than taking the sell near that of the high. They will wait for the low to be set and then try to take the buy positions. But once the traders start taking the buy positions near that of the low, and if the players do not make an upward stop, and what will happen? Then those who have taken their buy near that of the low have to book profit nominally about 5-10 pips, failing which they might incur loss. And during the slow slide, what happens? Once they are struck with the high level long positions, the traders tend to take a lower level buy in order to average and exit out of the positions. So till such time, the players are expected to make a nominal swing and slide moves in the market. And once the traders accumulate more long positions at a very low frequency of 20-30 pips or 50 pips, then they will show their true color of making further drop in the market. And once they make a big drop in the market, then those who have taken the long positions will find that all the positions are making loss and they will try to go in for long liquidation. So as I explained many times, that the players induce short covering and alternate with it of the long liquidation in the market. That is why you find frequently they change the market sentiments. So today, that is 4th of March, they are expected to swing and firm up during the Japanese session. and firm up initially during the early European session, go up to the high or make a brief upward stopping above the high if needed, and then they are expected to make the drop from that of the mid-European session. Then US session also they are expected to make the swing and slide moves. Then tomorrow, 5th of March, swing and firm up move could be seen, and swing and rise could be seen during the European session, and then they will offload from that of the US session. So this is hold and gain small levels so that the players or the traders will think that, okay, this particular currency is supported well around this level. Say, for example, euro is supported around 1.37 or 1.3675. GBP is supported around 1.66. Like that, they will assume that there is a great support available in those levels and try to take the buy or try to take the average and try to exit out of the positions. But the players are not here to give a big profit, but they may show 10 to 20 pips or 50 pips maximum profit if somebody has taken a buy during that of a quick drop, so that they will be able to book about 30 to 50 pips profit. Otherwise, they will show a very nominal profit for him to close. If he fails to close it and out of greed, if he is struck, then you'll find further slide happening in the market. Then 6th of March, swing and firm up during that of the Japanese session, and swing and drop could be seen during that of the European session, and then drop during that of the early part of the US session and recovery towards the close. And 6th, you come across the interest rate decisions in the case of BOE and the ECB and the ECB press conference. The players are here to make the downward move for that. It's nothing to do with a meeting and things like that. It is mainly the players want the long liquidation to happen in the market, and they may give so many excuses as attributes to that of the drop, but they are all nothing but the excuses, because the same excuse they would have just given it about a week back to gain the levels, but they will give it in a different tone, and then you find that, okay, it is pessimistic, so the market started coming down. So that is how they try to play the trick with it, of the traders from time to time. And so if you think that, okay, we have to observe the tone at which it is being presented, then they will say that, no, it is not the tone, it is the word they utter is more important. And from there, they get the clue and make the drop or the rise. Okay, you start following the statements word by word, and they will simply say that market has already discounted this and they envisaged this to happen, so that is why they drop. So the drop or the rise are the independent decisions of the players, irrespective of the data release or irrespective of the meet or the press conference or with regard to the data release or any such event. They are all being used as excuse by the other players. And on Friday, then firm up during the early session and then drop ahead of the non-farm payroll, and they are expected to make an early drop during that of the early European session and firm up before that of the non-farm payroll. And after the non-farm payroll, they are expected to make the swings at a higher level, and people might think that market might reverse and go up, but they will certainly make the drop. So this is the cunning way of making the moves in the market, and you can just take the snapshot or the screen print and try to watch on a daily basis how exactly they are making the moves in the market. Then you can understand that they are known to create the market sentiment, and once the traders commit positions, they are expected to act against the traders' pending positions. Nothing more than that in the market. And that is the only way to earn money. For example, if the broker has to earn money, the broker can earn money only from their clients, not from the market, only from their clients. So the broker might talk sweetly when you are trying to open the trading account, and later on you will show the true color in the event if they give a wrong fill or if they just close your positions accidentally, and they will try to justify And these are all the part of the game in the financial market. One need to understand that if you don't raise your voice, there are people to grab your money. Then the expected levels in the market. So if you find that it is at the higher level swing to make the slide, and they have made the prolonged higher level swings with a nominal gain of 20-30 pips on a weekly basis, and as I explained many times, that they take a longer time to gain the levels because it's extremely difficult to gain the levels in the market, and they have to invest more and more money, offload the positions and lighten their position, and again buy it at a higher level, and then offload the position and buy it at further higher level. Only then they can rise the market. But dropping the market is so easy because they simply withdraw the support to that of the buy. Then automatically, any level you sell, you see that profit is seen, and then more and more traders come and sell. The players also sell. The market drops. So always the gaining levels take a longer duration, but the drop happens in a few weeks or few days. So they are expected to show the high 1.3793 they have shown, and then come down to 1.372 as a low, and they are holding closer to the low now. And in the case of GBP, 6750 was the estimated high. They went up to 6751 yesterday, and then 6641 is shown today as the low. Then in the case of yen, again, they are expected, since it is a month beginning, they will set the lows in the case of the yen crosses. For that, yesterday you would have noticed that Euro, GBP and USD yen were all in red, negative net changes. And now you find nominal gain in the case of USD yen. Again, they are expected to push it down during the early European session. And when they firm up Euro and GBP a little bit, and then drop USD yen to induce the long liquidation in the case of yen crosses. Then they are shown the low 101.20, 101.68 is a high. They breached the high and went up to 101.74 and come below that. So a brief upward stop and to make it downward move again. So this is what they do it as a lower level consolidation with a downward stop, and people will lose the patience of going for a long position, even though it looks very attractive to take long positions. But what you can do is, when they are making a downward stop and below that of the low, you can take the buy positions to exit with a nominal profit. And after the next week, you can take the buy positions in the case of yen. Then they will make the one-sided rise. Don't be in a hurry during the trend reversal because they have to handle the derivative market. So they have to set the low and set the high for this month during the derivative, in the derivative market. So what in the case of options and futures, what they do is, so they will try to bet at 101 level in the case of yen, and people will think that, okay, that is not the level to be shown when it is around 102, 103. Then suddenly they will show it on the downside and grab all the money of the traders who have just written the call around 102, 103 or 104. And once the option expires, they will start gaining the levels. So this is the game every month they come across. So don't think that it is nothing or it is relation to that of the US dollar. So they always from time to time say something about the US dollar and the relationship with it of the majors, but independently they make all the majors. Yesterday you would have noticed all the currencies were showing red net change during that of the European session for a prolonged period. And what you can do, it is a mixed move or a contrarian move. The numerator showing the USD gaining move, denominator showing the USD weakening move. In what way we can attribute to that of the US fundamentals? So they are all nothing but the excuses, and again they do it, but still people think that market cannot be manipulated, and it is a $4 trillion market, and so market follows the technicals, and they try to follow the technicals and learn. And today I was noticing that in the case of Australian dollar, Many were of the opinion that Aussie has breached the red line on the downside, the resistance line, and once it has gone below that, they expected a further drop, but actually Aussie, they gained it. So this I saw it in a fixed rate chart, and so it is a clear indication that the players want the traders to develop the sentiment following the technicals, and being later on when they commit the positions, they trap the traders. Nothing more than that. It is nothing but a trapping game all the time. So we should see that as a wise man, not to get trapped again and again, and use your common sense. And this is a man-made market. In a man-made market, there is a question of the uncontrolled moves in the market. And it has to be regulated and it has to be controlled. Only when the man plays a high level buy, the market can go up. God cannot come and place a high level buy in euro at 1.38 when it is trading around 1.3732. Okay, it is somebody is placing. What vested interest he has got to buy it at 1.38 when the market is around 1.3739. You question all those things, you will be able to understand how the market is being manipulated in a syndicated way. Then USD CAD, they had done the higher level consolidation again in order to make a drop in the case of USD CAD. CHF. 87.75 could be the low, and they set it 87.82 and 93. They are expected to quickly gain the levels. Let us see. So far, they have gained it about 88.43 as well. Then in the case of Canadian dollar, from 1.1075 level, they went up to 1.1110, and they are expected to currently around 1.1091, and they are expected to go below that. And once it goes below that of 1.09, we'll find straight drop of 150 pips, and we'll see much lower level because a lot of stops will be hit at that level. And that's the way the players earn money. Then Aussie, they had done the 89.50, 89.67, 69, they have shown it, and then they have started making the slide, and it is expected to go to 87 area this week, and so far it has come to 88.81 yesterday. And today 89.10 is the low, but in the code page is showing. With regard to the market reading technique, now we find that euro has not breached the initial low or the high, which is set around 330 GMT. GBP has also not breached the low or the high. They are all making subdued moves. And USDN is the only one which has made that gain above that of 101.70 and went up to 101.74 and has come down. Still, it has not made 40 pips spread between the low and the high, and they are expected to make it during that of the late Japanese session and start making the slide during early part of the US session. And once USDN drops, immediately everybody will think that euro and GBP has to go up in a big way, but they will firm up nominally and start making the slide again. Then you will find all showing negative net change. Then USD-CHF 88.28 is the low, 88.43 is the high. They are making a lower level consolidation. Slowly, they are expected to gain the levels. And now you see that euro has made a drop of 3 pips, negative net change, whereas CHF is gaining about 8 pips. Yesterday, they had done pushing the euro and USD-CHF on the downside in order to handle euro-CHF on the downside. And later on, they started gaining more in the case of USD-CHF when compared to the drop in the case of euro. So that way, they try to gain the levels slowly in European process. In Canadian dollar, they have been doing the high level consolidation for a prolonged period around 1.10 to 1.12, and they are expected to make a big drop in this. And they are not breached the low or the high at the moment. Then in the case of Aussie, 89.10 is the low and the 89.69 is the high. They are not breached the low or the high. And 88.91 is yesterday's low, and they are expected to breach it from that of the mid-European session. Till this time, they are expected to form up, and so one can take sell position around 89.50, and then later on they will make the slide in the case of Aussie. So many of the traders have got the feel when the currency looks weak, then we can take sell positions. And when the currency looks strong, then avoid taking sell positions. But I was telling the traders that when they are making the high level consolidation, if we take a sell, we'll be able to see the profit. But after the drop, if we sell, then they may firm up, and that may give the impression that you have taken a wrong trade. And later on, once you do the short covering, they will continue to make the slide. So this you need to understand. When you compare to that of the yesterday's initial lows and the highs, they are just holding at a lower level, about 50 pips below that of yesterday's level. And so in the case of yen for a denominator, they are not gaining 50 pips correspondingly. They are not gained 50 pips. Whereas in the case of euro and GBP, they are dropped. In the case of yen, they just gained only about 20-30 pips. In the case of Canadian dollar also, they are not gained. They are simply holding around the same level. Also, they are holding around the same level. And only in the case of euro and GBP, they made that higher level consolidation and started making the slide, which could give that impression to the traders that market could go up in a big way of non-farm payroll or after the BOE and the ECB interest rate decisions, etc. But the players are here going to use them to their advantage to make the drop in the case of euro and GBP. So it might be the same data, same interpretation and same tone, but still they can make the move opposite to that. That is why traders continue to face surprises in the market all the time. So once you do the market trading, then what you have to do is then take the market is near that of the high and not breach the high for more than 30 minutes during that of the early or the late sessions. You can take a sell there, and if it is near that of the low and not breach the low for 30 minutes from the start of the session, you can take a buy. Then try to close it within the session. And that way you can do the basic swing trade within the sessions or session-wise trade. You can do it. And since it is trend reversal time, and avoid doing position trade, and the market is expected to make up and down moves alternatively using different stories, one need to understand it if you want to do the position trade. Then after taking the positions, once the position makes profit, keep stop at entry. And once the position makes about 25 pips profit, keep stop at entry and remove the hedge order to limit the risk or the buy stop or the sell stop. Then later on, keep 45 or 75 pips limit depending upon the swings. Always take positions when the spread become between the high and the low becomes more than 40 pips. Till such time, if you take before that the positions, what happens? Your holding time increases. Then you lose your patience. So avoid such things and you systematically see whether the spread has become more. Then you try to take the positions. Now in the case of Aussie alone, the spread has become more. And when they firm up, and as you know that the majors, you can take the positions during the early session and the late session. During the mid sessions, you can take only the positions in the crosses. Mid sessions, they will be testing the patience of the traders in majors. So they may make a nominal swing in the case of majors during mid session, but quick swings will happen during early and the late sessions. So when you take a sell during the early session, calmly wait during the mid session and book profit during the close of the session. And that is the way you have to do it, and always enter into a currency wherein the spread is more than 40 pips in the case of majors and more than 75 pips spread between the high and the low in the case of the crosses. Then always keep in mind they handle only two pairs at a given time in order to bring in volatility in the case of crosses. Okay. Now, if there are questions, you can ask me. Okay, I'll show the second and the third slide. This is the expected market moves in this particular week. Already yesterday is over. We've seen the slide. And the rest of the days in this week are shown here. I'll show the levels. Then Jacob has got a question. From which time period do you take initial lows and high? I noticed that it is rather 00330 and 230 to 330. Between 230 and 330, we have to note down the initial lows and the highs. It has been mentioned in the slide. Okay. Daily initial lows and the highs set between 230 and 330 GMT. Not from the start. Expected lower levels for GBP and Euro. These are all the mathematically derived lower levels we could see in this week. Because you know that the drop can happen very quickly and suddenly they may show all 6 levels. George, how much drop is expected in GBP? And today they should be able to drop another 100 pips. And see, they know very well, below 66, the traders will become bearish. So what they will do, they will go up to 65, 87 and then come to 66. Then traders will think that, okay, it will go to 68 again and try to take the buy positions once they stay there. And you know, they induce the traders to follow technicals and take positions. Then you will find that there is a strong demand around 1.6585 and then market has bounced to 1.66. So it is better to buy there. Then later on they will show lower levels. Jacob. The spread between the high and the low between a major is more than 40, between the high and the low in a major is more than 40 pips. Direction south. Can we expect a movement to the north or it can be either to the north or the south? Now, so his question is basically, when they have made the spread between the high and the low is more than 40 pips like Australian dollar now, and they are holding in the middle level. And what they do is they try to make a false form up before making a drop. So during such form of moves, you can take a sell positions. They are holding net change, 9 pips negative net change, and you know that during that of the data release around 3:30 GMT, they formed the high. And in just about 5 minutes, they just came below that of the initial, what they are around the 0030 GMT. And so there was basically a brief stop and above that, and then came down. So, which indicates that they finished the upward stop and for the data and they are holding it lower. They will again firm up and come closer to the high and then start making the drop. At the time, during the late Japanese or during the early European session, take the sell position. Identify the currency first, then wait for the time to enter into a major. Don't jump into positions because market continues to give lot of trading opportunities. And you think that in a hurry you have to enter, afterwards you may not get those levels and later on see that it is a poor entry. In general, what could be the direction of Euro Aussie in short term? Euro Aussie, see, Aussie is going down and the Euro is also going down, but Euro is relatively going down on a lesser pip range when compared to that of Aussie. So Euro Aussie is expected to go up initially, and later on when the Euro started dropping, it will also drop. So always related to that of the majors in the numerator and the denominator, which is relatively strong or making less pip change. That way you can identify. See, Aussie, Euro is showing 0.0 net change, whereas Aussie is showing 9 pips net change. So Euro Aussie will be showing negative net change. Euro Aussie here. So because denominator is a negative net change, so Euro Aussie is showing about 16 pips positive net change. Because the denominator Aussie is in negative net change, and Euro is also now showing negative net change. So they are making a brief upward stop in the case of Euro Aussie, and they are expected to make the slide afterwards when Euro starts making the drop. In England, please repeat your comments on the lower level of GDP. I already explained it, sir, in Sahana. Nowadays, a recorded webinar is not available under archive. You notice that it is not indicated that the text will be replaced. No, and I think there is a problem with regard to Internet Explorer. When you try to view a text read, it is not coming fully with all the links. I think we have to use the Chrome or the other browsers, then you will be able to see the recorded webinars, because I have noticed it by myself. In Internet Explorer, it is not compatible. From Yasin, when can we take position trade? Since you gave calls on position trade. See, position trades can be taken from the second week of March. See, I have given the long levels, the expected low and the expected high. One can do it provided you have got adequate equity. See, just because I have given the position trade, not everybody can do it. Ultimately, your usable margin or the free margin is going to decide on whether you are going to do the position trade or swing trade. And also the number of positions you are going to take. Always keep in mind, taking positions, it might take the used currency or the margin depending upon the leverage what you are enjoying. Like 1:200 or 1:100 or 1:50, etc. But if the market goes against, then all the positions in respect of the leverage will start showing loss. Whether you are prepared mentally to face such losses. So always think of the possible market moves against you. So if you think of the market making a move against you and how exactly your equity is going to protect, and there is no need to keep the stop, still your equity will be protecting you very well and it will not attract margin call, then you can do the position trade. Otherwise, if you are having a lesser equity, like 5,000, 2,000, etc., then you can take only one mini lot or one micro lot and try to do position trade, then it will give profit. Because this people fail to understand. Then may I ask, is it possible for you Thursday or Friday webinars could be recorded under archive? So it depends upon the discretion of the fixed rate. I cannot do anything, sir. So no more questions, I suppose. Let me show the slides. See, my opinion, the webinars are conducted mainly for the benefit of the visitors. And once they record the webinars, invariably what happens, the traders think that, okay, we'll listen to the recorded webinar later on. They don't attend the webinars. And so FX Trade is taking so much of effort to give arrange the speakers and give the webinars, and if they don't get adequate participants, they also feel bad, for having spent so much time in organizing everything. So that also you have to take into considerations. So some webinars they will try to record and keep it in the archives, and some you have to attend live. So put in some effort, only then you will be able to learn it properly. So it will not be given like a spoon feeding or free all the time. Then you don't find the value in it. That is very unfortunate situation among human. When it is given free, then they don't assess the value of it. When it becomes priced, then you think that, okay, it is cheap or it is expensive. That is a relative study mentality of human. Then Karthik, what about silver? Silver and gold are expected to make the slide in this week. Then Jana, what would be the low for euro in short term? So they could drop about 100 to 200 pips. So always you will come across in the case of crosses at least 200 to 300 pips moves in a week. Because they make one-sided moves suddenly. In Hamza, sorry, but how to download the full one? I missed most of it. How to download the full one? I don't know. I'm not able to get what is being asked. Okay, fine. With regard to the webinar, okay, fine. So you can just see it in FX Suite under archives. The webinars are being displayed. You click and the window opens. You just click in the middle of the window. The webinar will start playing. There is no need to download. Okay. Then this is with regard to the expected market moves, and this is with regard to the expected levels. So I'll come back on Thursday, 6th of March, day after tomorrow, and try to review along with you what has happened in the market for the prime data release time. And later on, we will see how exactly the players are expected to make the moves in the market and how they are planning to trap the traders from time to time. So my humble suggestion will be at least avoid getting trapped. If not, you don't make money from the market. So wish you all happy trading. Thank you. See you on Thursday.